What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are talking about the monstrous rallies that gold and silver are continuing in, and how, number one, it's very exciting, and then number two, what we should expect next. Let's dive in. Alright guys, if you followed me and have been around this channel for any length of time, you knew that my target by the end of August for gold was $1,900, that it would hit that $1,900, that all-time high mark, and then I thought it would come back down to that $1,800 support level and reconsolidate there before continuing a rally and turning kind of parabolic. Similarly, my target for the end of August for silver has been that it would hit the $25, $26 range and then sell off a little bit, consolidate, build up some more energy before continuing its rally. Now, clearly those bets were way too conservative because the energy that was building up behind these rallies was way too strong to keep them at, below those resistance levels that I had pegged. They also moved a lot faster than what I had anticipated. I said by the end of August, they blasted through those levels already. Now with silver, we did get a little bit of a sell-off from 26. It was overnight in the futures markets. As soon as it hit 26, there was a massive sell-off. Looked like it was a bunch of traders trying to dump contracts onto the market to push the price back down, but that didn't hold up and it resumed its rally again pretty soon after. Now I'm recording this episode Wednesday, August 5th. It's about an hour before the market closes here. So as of right now, the price of gold is just around $2,040 per ounce, and the price of silver is just over $27 per ounce. And so the big question is, now that gold and silver have passed my price targets and it looks like they are sustaining those levels, what do I expect will happen next? Do I think this will continue? Do I think there will be a pullback and an ability to buy back in at a lower price? And quite honestly, the answer right now is I have no idea. Okay, let's unpack that a little bit. Obviously, nobody can know for sure exactly what will happen in any market, because then you'd be a billionaire and you'd be sitting on your private island. But right now, especially during this month of August, this is one of the reasons why I pegged the end of August for my price targets, is because of the short squeeze that we're seeing in the futures markets right now. And I will have to wait and see how this month unfolds to be able to come up with a better idea of what I think will happen after this. As of this moment, it does look like the short squeeze is still in full effect. It looks like the prices are going to continue to rally. With gold, you can't really do much technical analysis of the price movement at this point because, number one, the short squeeze is so insanely powerful. Up until now, these shorts, the net shorts with the swaps, have been at record high levels. And so it doesn't matter what the chart looks like. It doesn't matter what the indicators look like, the technical analysis. It's all kind of thrown out the window when you experience fundamentals like this, because every single price movement down gives an opportunity for the shorts to close out at a little bit of a better price. But when you're short and you close, that's a buy. That pushes the price back up. And so in a short squeeze, you see a really, really parabolic move, just a straight up line in an asset price. Further complicating that are the delivery requests, and there are a record number of delivery requests on gold right now that everybody who is long the contracts, who has bought futures on gold, they're standing for delivery. They're not wanting to close out and sell those contracts to close. They're not wanting to settle for cash. They're wanting to hold those contracts and actually get gold delivered. And so there's massive issues right now in the gold markets because there's not enough physical gold to back up all the contracts, because there's so many naked shorts that are in the market right now. And so this is pushing the price up and up and up and up. And I don't know how long this can last. You don't see those numbers come out on a day-to-day basis, so you have to wait to see the commitment of traders, figures unroll and be released. And so as those are released, I'll get a better idea of what it looks like the price of gold will do. But as of now, it looks like that short squeeze is still in full effect, and so there's no way I'm selling right now. I'm not expecting there to be a pullback, but we've seen a fantastic move already, and so I wouldn't expect to see another 10, 20, 30%, anything insane like that happen in a very short time frame here in the next couple of weeks. Now with silver, it's a little bit of a different story because silver, you do have the ability to do some charting, to do some technical analysis because we're not in this record territory yet. We've seen price action here many times, and so that's why I pegged 26 as kind of the top, but we blew through that and now we're at 27. So as long as we stay really above the kind of the in between the 25-26 mark, if we stay above there per ounce in silver, then I would expect a pretty quick rally up to 33 because that's where the range is when we're in this price range. There's, it's kind of like 25-26 at the bottom and then around 33 to 35 at the top. And so as long as we sustain above here, I would expect a pretty quick rally up to 33 to 35. Now, there's a couple important things to note here. When gold and silver are rallying, in general, when you look at a macro long-term perspective, really what that is reflecting is the purchasing power of the dollar dropping. Now, we've already seen the purchasing power of the dollar drop relative to other currencies, other fiat currencies, by using the dollar index, DXY. If you look at that, my price target for that was originally 95. Then when it broke through that, I dropped it to 93. It hit 93, and I said if it drops below 93, I expect it to continue to go down to 88. Well, we hit 93, we bounced, we hit 93 again, and it looks like we're starting to bounce right now. I don't know if it will hold. If we don't hold up above that, right around 93 on the dollar index, I would expect another severe fall. But keep in mind, what the dollar does relative to other paper currencies is not necessarily reflective of what the dollar is doing relative to commodity money like gold and silver. And so the dollar can strengthen versus other paper currencies at the same time as it's weakening compared to gold and silver. And so when people talk about a strong dollar or a weak dollar, or you hear talk about the dollar milkshake theory, it's always the dollar versus other paper currencies. And so that's why people say you can have gold rising while having a strong dollar, because you're comparing two different things. Nobody who knows what they're talking about is saying that you can have gold rise compared to the dollar and the dollar rise compared to gold. Clearly, that's nonsensical because you can't have two things rise against each other at the same time. But on a wide scale environment, what we're seeing right now is that paper currencies are losing their purchasing power very quickly when you compare them versus long-term money like gold and silver. When you compare them against asset prices, they're losing their purchasing power. And when you compare them against goods and services, they're losing their purchasing power. And the cheaper the dollar gets compared to other currencies, the more foreigners will start to exchange their currency for dollars in order to buy goods from the United States or assets from the United States. And so that's not necessarily something that will push the value of the dollar up, because yes, when you exchange, a euro for a dollar, then you're selling the euro and buying the dollar, but then you're selling the dollar again to buy a dollar denominated asset. And so ultimately, when you look at why anybody would buy dollars right now, it's just in order to get rid of them for something that they want more than the dollar. And it's not just gold and silver. If you look at the stock market, you can see that we are poised to start a rip-roaring rally. We've been continuing to just trickle up and up and up, and very soon here, we're going to enter that FOMO rally stage. As soon as there's a giant government spending bill, especially if it surprises people on how big it is or how the money is directed, if the S&P 500 ticks past and then holds an all-time high right above the $3,400 mark. There's a lot of money shorting equities right now, and there's a lot of cash on the sidelines. And so you're going to see a massive amount of, I don't want to miss out on the next rally, money jump into the markets that will continue to push it up, another short squeeze to push it up higher. And so I do expect we're going to see a massive rally, and we're very close to that $3,400 mark, which is my target by the end of August. So I apologize for anybody who is really hoping for more of a comprehensive new updated price target here. I can't say anything like that yet at this point, due to the fact that August seems like it is critical to see how the bullion banks and the gold trading desks figure out their net short positions, how the deliveries are made. We're going to see whether this breaks markets. We're going to see whether there's any gold available for delivery in the giant central bank vaults that they say are there, like in the Bank of England. because it looks like all the gold that they're counting as available for, liquid trading is already committed to things like ETFs and central banks. And so we're going to see how this all plays out. And this month is kind of critical for that. So yeah, I do think the price of gold will continue to go up from here, but I'm not making any specific price targets or timeframes yet at this point because August is critical. Now, if you want more up-to-date information, I tweet all day long, pretty much every single day, about stuff that's happening in the market, financially, economically, all around the world, in the United States. And so if you're on Twitter, follow me there. And I promise you, you'll start to know financial news and economic data before anything that you'll see on CNBC or Bloomberg or Yahoo Finance. If you liked the video, hit that like button for the YouTube algorithms. It really does help the channel out, and I appreciate you guys. Thanks so much for watching. Have a great day.